This segment is going to look at some details of preferred stock. Preferred stock is a separate class of stock, typically having priority over common shareholders for dividend distributions and the distribution of assets in the case of a corporate liquidation. The negatives to preferred stock is that it doesn't have any voting rights. However, it may have a stated dividend rate. Preferred stock allows a corporation to raise capital without sacrificing control. Because preferred stock has no voting rights, they don't have control over the corporation. It does boost the return earned by common stockholders, and it appeals to investors who may believe that common stock is too risky or that the expected return on common stock is too low. Preferred stock can either be cumulative or non-cumulative. Cumulative preferred stock means any dividends in arrears. What that means preferred stock can either be cumulative or non-cumulative. Cumulative preferred stock means any dividends in arrears, dividends that were unpaid in the past and have accumulated. Any of the past dividends that weren't paid must be paid before dividends can be paid on common stock. If the preferred stock is non-cumulative, any undeclared dividends from one year do not carry forward to future years to be paid in future year dividend payments. Most preferred stock is cumulative. Consider the following equity to see how cumulative and non-cumulative stock differ. This corporation has two classes of stock, common and preferred. The common stock has a $5 par value. Currently, 40,000 shares are issued and outstanding. The preferred stock is 9%. This is the stated dividend rate. Preferred stock has a 9% stated dividend rate, a $100 par value. 1,000 shares of preferred stock have been authorized, issued, and are all currently outstanding. Remember, outstanding means these shares are currently held by owners outside of the corporation. Total paid in capital is $300,000 as of the date of this balance sheet. The board of directors did not declare or pay dividends in 2019. In 2020, the board of directors declare and pay cash dividends of $42,000. We are going to determine how much of those dividends will go to preferred and how much will go to cumulative. Preferred shareholders should be paid based on their stated dividend rate. Recall the stated dividend rate is 9%. So we take the par value times the stated dividend rate times the number of shares outstanding. Based on the shares outstanding, preferred shareholders are supposed to receive $9,000 in dividends. To determine how much of the $42,000 dividend goes to preferred and how much of it goes to common shareholders, we're going to first assume that the preferred stock is non-cumulative. Because the preferred stock is non-cumulative, we didn't pay any dividends last year, but we do not worry about it. There's no dividends in arrears. In 2020, the only dividend we need to worry about are current year dividends. Based on the stated dividend rate, preferred shareholders should receive $9,000 in dividends. $9,000 will go to preferred. The remaining $33,000 is available to the common. Instead, let's assume that the preferred stock is now cumulative. 2019, no dividends were paid, which means we have $9,000 of dividends in arrears. Preferred stock is cumulative. We keep track of unpaid dividends. 2020, we need to pay prior year dividends in arrears in the amount of $9,000. We also owe the preferred shareholders the current year's $9,000 in dividends. Total amount of dividends for the preferred shareholders in 2020 will be $18,000. which leaves the remaining $24,000 of the $42,000 in dividends for the common shareholders.